What if you could test your trading strategy before risking a single dollar? Most traders gamble, but pros backtest. And today I'm going to show you how to read your results like a pro inside of Archaide. And if you don't know who I am, my name is Tim Yslava. I'm the founder of Archaide.io. I built a trading platform that basically allows everyone from beginners to experts to not spend time coding or guessing through their strategies, but to just have everything totally automated for them. Okay. Everything you're about to see can be done in minutes without coding, no development team. And I'm just super excited to show you Archaide. Okay. So in the last video, I went ahead and showed you exactly how to backtest inside of Archaide. We're going to briefly cover that, kind of backtrack a little bit, but primarily we're going to go over how to assess the results. Okay. And before I go into that, right, let me kind of just educate you. What exactly is backtesting? Okay. So backtesting is your trading time machine. Okay. It lets you test how your strategy would have performed in the past using real market data so you can see what works and what doesn't before risking any real money. Okay. So, that being said, this is a backtest for Apple. Okay. We're looking at the last 100 days. We have about 10 shares of Apple, and this is exactly how it would have performed using this strategy that we have built. Okay. So, again, we want to take notice of the total trades, right? So if you're not someone that wants to take a bunch of trades, or like have to monitor, uh, the individual outcome of each trade, right? Over and over and over again. Like, think about scalpers, right? Or people who are incredibly high frequency traders. Uh, they are going to be more prone to taking more bets, more trades. If you are not that kind of person, you likely want to take less trades, right? Be in the market less. So, and then the win rate is another thing that you might want to consider. I personally like to look at profit factor, how profitable was each trade, rather than how many trades were profitable. However, both of these are looking pretty great, right? Again, you're going to have to set your own sort of standard for what you want to achieve, and you also look at your P&L, right? And then your max drawdown, right? So P&L is obviously how much money you made during the time frame. So over the last 100 days with 10 shares, you made $500, right? Not bad. Again, we're going to go into the details here shortly. And then max drawdown as well, right? So max drawdown is how much money did you lose, the most money you lost on a single trade, right? So 0.28%, not too bad. Okay. So, and then also inside of Archaide, you're going to be able to see how much money you made over time, which is cool. And then also the history of every single trade that you've ever taken. Okay. So now let's get into actually how we're going to assess some of these things and how I would go about thinking about some of these things. Okay. So let's look at the max drawdown first. Okay. So we're looking at the last 100 days. In general, we want to see, especially if you're someone that cares about keeping their money, right? Like you don't want to experience any highly volatile strategies, right? So think about Apple during COVID-19, right? Or some of these companies during these really big drawdowns. Um, check it out. So over here, right, we'll actually go the last 5 years or so. Let's go max it out. So during COVID, right, well, we'll actually go through this drawdown right here, right? This drawdown, if you care about keeping your money, right, you would have lost 33% of your money, right? So you want to avoid that. It's a third of your money, right? So if you had $10, you lost $3. If you had $100, you lost $33, right? So forth and so on, right? This is a big chunk of your money, right? So in the last 100 days, let's just say 6 months or so, right? For the conversation's sake, we've seen drawdowns of 5% for Apple, right? We've seen drawdowns of 8%, right? We've seen drawdowns of 8.2%. This is big drawdowns, right? And again, even in the last, month or so in September, we saw a drawdown of close to 5%, right? So when you compare that to, right, especially if you're really like risk off, right, compare that to the max drawdown of 0.28% in these trades, right? You're doing really well, right? You're not going to experience that huge drop in your portfolio. Okay. So that's one thing to consider as well, right? Now, that being said, this one we should just add a calculation for this to determine the percent profitability, how much money you actually made, right? But let's just back into it. So we have 10 shares of Apple, okay? And if we go back over here, so a share costs about 200. So we spent about $2,500, right? So let's go back 100 days from today, right? So 100 days from today, I'm doing the calculations right now. I'll kind of bring you over here with me, right? So 100 days since today, probably not phrasing this correctly, but it is going to be, so 100 days before today. So June 29th is the day that we care about. So let's go back to June 29th. So the market looks like it was a weekend, right? So let's go to June 30th. So the market's been up 25% since June 29th. Okay. So, or sorry, Apple has been up 29% since June 29th. So, but if you look at just the price of on June 30th, June 29th, it's 205, right? $205, which means we spent about $2,000, right, on our stock. Okay. Actually, I'll bring you over here, right? So we spent about $2,000 on our stock. And that's the price. The market was up 25%. So if we go back over here to Archaide, right, and we do some math, right? So we spent $2,000 on our stock, made about $500, right? So 500 divided by 2,000, we made again about 25% on our money, right? Not bad over the last 100 days. Now, again, that's about the same, right? It's basically about the same as Apple, right? As just buying and holding the stock. Now, again, you would not have to deal, right? So, like the pros right here, you wouldn't have to deal with the 5.6% drawdown, right? The biggest drawdown that you would have to deal with, if you use this strategy, right, is 0.28%, right? Is a very small drawdown. Okay. So, the benefit again of using this strategy so far from what we've seen is not necessarily that you're going to make more money than just buying and holding, but is that you're going to experience significantly smaller drawdowns during this time frame, right? Obviously, backtesting isn't, the end all be all, right? You don't know. Past isn't necessarily prologue, right? So not a predictor, right? But it's basically the best thing that we have, right? There's no guarantee that any investment you make will be successful, but and past will not predict the future, but you got to use what you have, right? And so most retail traders don't use anything. They kind of just guess and gamble, but this kind of gives you some sense of like, hey, over this time frame, we had small drawdowns and roughly the same profitability, right? So that's something to consider there, right? And then similarly, right, you also want to compare to just the S&P 500, okay? So instead of checking, just Apple, right, you want to compare it to um, a broader sort of uh, a broader sort of set of basket of stocks like an ETF, right? Over that same time frame, how did it perform, right? So we care about, so June 29th is our day, right? So June 30th. So overall, the market was up only 8.3% during that time frame, right? So again, if you bought and hold Apple, you're going to go ahead and experience a 25% gain over the last 100 days. If you buy the S&P 500, you're going to experience a 8% gain, roughly. And again, if you use our strategy, right, you're going to experience a 25% gain. Now, the thing that differentiates them, right, is again the drawdown which you experience, right? Looks like the max drawdown here is 2.4%, right? So again, this is still larger drawdown than what we saw in our strategy. So the thing that I would consider is your, risk adjusted return, if you want to call it that. There's better, calculations that you could use, right? Which we're going to add into our platform eventually. But the risk adjusted return, this, back and napkin risk adjusted return says this using the strategy is by far and away the best way that you could have that risk adjusted return. Okay. So that is that. Now, if you have any questions about, how to use this strategy or use this backtesting tool, feel free to let me know in the comments down below. If you need to adjust this backtester to, if you want to check the last year, right, you just simply change this to 365, right? And that'll change your look back period. If you want to change this to NVIDIA or whatever, right, you can change this to any stock any cryptocurrency, and kind of go from there, right? So you have all of this, all of these tools, plus so much more that I have not shown you inside of Archaide. And if you have any questions, right, if none of this makes sense, if any of it makes sense, if you have any questions or have any, you know, if you disagree, right, you think you should factor in other things besides max drawdown or PNL, feel free to let me know, right? So anything that you have questions on or comments or concerns, I'd love to hear them. Okay. So, but that is it for Archaide. You could do this for this strategy, or you could do it for this strategy, right? You could do it for infinite strategies, infinite backtests. But again, broadly speaking, you want to make sure that you're outperforming on a risk adjusted basis, the underlying asset, and also outperforming a benchmark of your choosing. Okay, so that is how you're going to assess this. The results of your backtest here inside of Archaide. Again, if you haven't already, feel free to like, comment, subscribe. Most importantly, subscribe. I really want to start building a community of people who are into trading, and hopefully provide some value to that community, right? We have a Discord. Let me know if you want that. But super excited to continue building with you guys. Okay. All right. Awesome. Talk soon. And